Good morning and happy Monday. Welcome back to the Daily Grind. I'm your host Chump Change, just live and recorded. For those of you that might be new here, we typically do is go over crypto news or news in general in the space. I update myself, bring you guys along for the ride. Let's see who's here in the house, and then we'll get into this. Mr. Matt Electron trolling me as always. Listen, just because you've been up since 3:30 in the morning doesn't mean I am, all right? I'm just kidding. I actually was running a little bit behind. I had to get gas and stuff on the way back from dropping the kids off. Andrew Masad, what's up, dude? Steven Cicero, good to see you. Chris Hanley, good morning, sir. Mr. Carl Coate in the house. Andrew Masad, Dumpster Fire, what's up, dude? We have DDA40X fan Bruce. What's up, man? Good to see you. I'm just gonna call you Bruce from now on. Let's see Crypto Craig also trolling me. Thank you for that. Automatic Beats, what's up, man? The one who was Sustainable Crypto said he said hurry up, let's go, I have court at 10:30. I'm sorry, buddy. I'm sorry. I know why. I'm not going to troll you about it. All right, let's get into this. Bitcoin 58,526 bucks. We got Ethereum at 2638. Bitcoin was over 59,000. If I started a little bit earlier, I think we would have been all right. Geek of all trades, what's up, dude? Thanks for stopping by, buddy. We got LTC at 60 bucks, Solana at 145. Well, LTC's at 60.22, right? And 145.50 for Solana. XRP at 56 cents. Bruh. I'm telling you, XRP, man, they let you down every single time. Caspa, what's going on? Under 16 cents over here. Brutal. That's brutal. ETC $18.68. We got Dogecoin at 10 cents. Everything's down today, huh? It is a Monday. We typically see this happen on Mondays, so it is what it is. The crypto market's got a case of the Mondays. All right, let's see. Crypto bubbles over here. Biggest winner seems to be Sui over here. Sui $1.02. Look at that. We got ADA again down 3.4% actually at 33 cents. ADA I think is a good buy, to be honest. I've been saying that for a while too. Let's see. Nothing else really jumping out at me. What is this? Mantra over here, 95 cents, down 8.6% today. We got APT, Aptos, up 6.5% to $6.48. HNT is up 5.6% to $6.55. Anybody still holding HNT? Let me know in the chat. If you guys have any questions, obviously just at me in the chat as well if you could. That would be nice, that way I could see it easily. Render over here down 4.6% today to $4.56. Damn, I think Render is going to be a decent one as well in the bull run, I hope. Anyways, BitTensor over here, we got 277 bucks, down 5.4%. Does anybody bought this yet? Let me know. And where did you buy it if you did? Because I think I want to get some. I just don't know where to get it. Sats 5.7% up today. Just broke back into the top 100 as we were talking. If anybody's holding that, I don't know what it is, to be honest. All right, Flashbang Fear and Greed Index looking like a 25. That's pretty bad. Extreme fear. Extreme fear. People are nervous, but listen, we gotta climb back up the ladder slowly. We can't just have this thing skyrocket back into the green. So 25, listen, it's still time to buy, in my opinion. Still fire sale everywhere. That's how I feel about it. But anyways, all right, let me just refresh this. Trending coins over here seem to be Sui, Ginan, is that how you say that? Ginan, I don't know how to say that. The cat, some meme coin. AIT protocol is down 2.1% as well. All right, top 10 coins by coin market cap over on CoinGecko. We have Bitcoin, Ethereum, Tether, BNB, Solana, USDC, XRP, Lido Staked Ether, Toncoin, and Dogecoin in 10th place at $15 billion market cap. We got Cardano just behind it at about a $12 billion, 11.9 over here market cap in 11th place. Let's see, Litecoin, we're gonna watch a video a little bit later today with from Altcoin Daily of Litecoin, talking about Litecoin. He broke things down and where he thinks Litecoin could go and stuff, so I want to see where that's gonna go. I hope Litecoin's gonna do very well this bull run. Again, it's still down 85%, so you know what, I like to invest in coins that are down 80% before the bull run. It's kind of a safe bet in my opinion, especially for a coin like Litecoin. It's been around forever. Let's see, Caspa still in the 26th place, top 30 over here at a $3.8 billion market cap. Caspa's still doing ridiculously good. Perfect. Compared to everything else, being, you know, a coin that's never had a bull run. And yeah, it's fairly new. To be in the top 30 is unreal. I mean, I guess right ahead of Pepe is not really much to squawk about, but $3.4 billion market cap on Pepe. I still don't understand why people buy these meme coins like that much. Anyways, it's crazy. Ethereum Classic's in 32nd place. Not too bad. I hope that does well, actually. That we need something to carry the miners, man. Ethereum Classic needs to come back. How's Octaspace doing, actually? I know Octaspace was a good option to be able to mine with those ETH hash things. Damn, man, that took a hit, huh? Bruh. Let's see. 7 days, 1 month. Damn, it's been taking a shit. Yeah, you know why? It's probably because people are mining it and selling the shit out of it. Damn, this is a deep in project if you guys don't know. Octaspace, $1.55 as of right now. Its all-time high was like 2 something, 239, 35% down. It's been doing very well though. It's up over the last year 1189%. That's crazy. And the summer, yeah, the summer does always suck. Andrew Masad always sucks for crypto market every single time. Once we get into like September, October, November, that's when you start seeing the lift off, which hopefully that'll happen and hopefully it'll go well. All right, let's move on to the mining segment of things. You guys know I like to timestamp this stuff. Let's see what we're looking like. Oh man, hold on, I gotta go to lithium first. I gotta look. What's the lithium looking like? Jesus, bruh. $1.50. It was worse. It was $1.44. Damn, last 24 hours. Holy hell, the lithium's taking a beating. All right, well, there we go. Bitmain Antminer AL1 Pro. This unit's not even being released until September. It was making like $500 a day the other day, like last week, and it's a 16.6 terahash unit. It's making $346 a day, again at 10 cents per kilowatt hour, depending on what your electric rate is. You guys can change this and see the price change. All right, AL1 over here, 15.6 terahash unit. I think these are supposed to be shipping this month if I'm not mistaken, but who knows? $325. I said this is going to go down to around $200, so I want to see if I'm correct, if it lands when they actually land at people's front doors. If this thing's at 200 or less, I think that's going to be the case. With the KS5 Pro over here, 21 terahashes, making $23.64 a day. Oh, that's pretty bad. That is pretty bad. Oh, Crypto KJ, was it really $952 last week? Was it really? Oh my god, that's even worse than I thought. That is even worse than I thought. I thought it was like in the 500s. Damn, I remember this one was over 1,000 for sure, but yeah, I don't know. It's crazy, guys. It's crazy. We have the KS5 20 terahash unit making $22.52 a day. Again, it's like we say only like $20 a day for not doing anything, just plugging a machine in and it running. It's pretty cool, but like when they cost the price of a minivan, it's not so cool. Like you're not gonna make your money back at $20 a day. That's crazy. I don't even know how much these things are going for anymore, to be honest. We got the Antminer L9 over here, 16 gigahash unit, making $17.56 a day. I'm still wondering if anybody has gotten one of these. I don't think anybody has. I think they're shipping them out next month, or maybe, I don't know, I could be wrong with that actually. We get the Gold Chill AL Box 2 over here, 720 gigahashes at 360 watts, making $14.56 a day. That's also an oof, because that was over $40 a day like a week and a half ago. Not even. Or maybe, you know, 2 weeks ago it was over $40 a day. Yeah, it's pretty bad right now. It's pretty bad. AL Box 2, I don't know where this thing's gonna end up, but man, I've been giving my hash rate to these my VIP members, and last night actually I had to reset after I set it to Joker Miner's wallet. I think he just might be a jinx or something, but I had to reset it a couple times and change the port address to see if that changed it. But the gigahashes, the average gigahash was only like 500. I don't know what's going on with it. It's weird. It had like a bunch of spikes up and down too, so I don't know what's going on, but I don't know. Maybe it's the pool. Could be something wrong, or it's my connection out in the trailer. Who knows? I gotta figure that out today. I gotta check it after this stream. All right, let's see. The KS5M over here, 15 terahash unit, making $14.13 a day. We get the Alpha Packs DG1 Plus. Oh, they have a plus unit now. Look at that. I didn't notice that last week. It was probably there, but I didn't notice it. $13 a day. We got the DG1, the original, at $9.41 a day. KS5L over here, $9.67 a day. We got the Ice River Lithium ALO, supposed to be shipping in August. I think these things had a delay if I'm not mistaken, but you're making $8 a day on 100 watts. That's pretty decent. for right now until lithium just completely goes to shit, and then we're all screwed. That's pretty much how that goes. I hope we're gonna make our money back on that thing though. It's just, I don't know, it's crazy. Lithium's price needs to appreciate ASAP. We have Dragon Ball Miner KS6 Pro over here, 11 terahash unit making $7.70 a day. The BM KS Max 10.5 terahash unit making $7.44 a day. The original AL box 360 gigahashes at 180 watts making $7.28. The Antminer L7, let's go to the 9050. This is the unit I got down at Terra Hosting. Shout out to them if you guys are interested. Links are in the description. 10 cents per kilowatt hour down there, $6.28 per day. It is again, this unit's been profitable throughout the entire bear market, so I've been more than happy with this, and I can't believe that these things still go for $6,000. These machines still go for $6,000. Like, it's crazy. It blows my mind that it's still worth that much money. Like, literally, I paid $5,000 for mine 2 years ago. Or that's how much it was going for. Sorry, I didn't pay for it. I got it when it was going for $5,000. Okay, Musk Miners actually sponsored that, so huge shout out to Musk Miners to them. But that's what they were going for then, and they're actually $1,000 more than they were. It's crazy. It just blows my mind. I don't understand it, but the L9, I think you guys might have a good chance to do good things, I guess, with that. So we'll see where that goes. I want the L9 sustainable crypto. Me too, to be honest. We'll have to see what happens there. But yeah, I don't know. They're just, what are they, like 11 grand or something? Maybe not. Yeah, I think they're like 11 grand. I'm trying to recall our conversation on Saturday night. Pretty sure that's what it is. All right, Jazz Miner X16Q over here. I got this thing in the trailer solo mining ETC. Haven't hit a block yet. 1.95 gigahashes, $1.06 a day. You know what? I should probably just put this on pool mining and say screw it. Screw the solo mining, because solo mining is hard when I'm shutting it off every like night. You know what I mean? Because I'm not having these things run throughout the night. The Jazz Miner X4Q, I got this thing in there as well. That only makes 21 cents a day. Damn. And the X4 1U only makes 10 cents a day. Oh, it's terrible. That's so terrible. The the Gold Shell Mini Doge 3 Plus over here, 810 terahash unit making 10 cents a day. Bruh. Yeah, no, don't buy that. I'm sorry, it's not worth it. That machine is not worth it. All right, where is the Ultra? Did I pass that? KS0 Pro. Where's the Ultra? Oh, right here. KS0 Ultra, make it 35 cents a day. That's it. Bruh. That's kind of terrible too. All right, I'm done. This is freaking depressing. I'm not looking at my Bitcoin miner today. We're not doing it. We're not doing it, people. All right, let's move on to GPUs over here. The 170HX looks like Zealous top of the charts and Ironfish. You get Xano up here, Nexa, Neoxa. How's Neoxa doing? Probably not well, but let's see. Jeez. God. This thing dropped a whole decimal point. I should probably check on my iNodes. Those shits just been there forever. I haven't looked at it since I got it. Dude, this is terrible. I got my node. Where was I think it was. Yeah, it was like here-ish. It was the beginning of this year, right? I'd have to go back and look. I think it was the beginning of the year, because it was about 2 and 3. 0.002, 0.003 hundredths of a penny or whatever it is, or tenths of a penny. I don't even know how you do that, to be honest, but it went up to 4.004, right? I think it's tenths. And damn, it dropped a whole decimal point. That is awful. That is awful. I really hope Neoxa comes back. I like that project. That sucks. All right, we got over here, is this Cortex? I think it's Cortex, right? Yes, Cortex, top of the charts for the 4080 in Ironfish, and that's Husat, right? Xano, Ironfish, and Husat as well. Over here, Bitcoin Gold to the 4070 Ti, 3070 Ti laptop Xano. Please don't mind your laptops. That's crazy. Neoxa. I wonder if there's like a bigger yield on Neoxa, and that's why these are more profitable. Interesting. Chlor also on the Radeon 7 6800X. Sorry, the RX 6800, and then the 6600 XT. Yeah, seems to be Xano a lot of the way down. Let's see. Check out Xano. How's Xano doing? Up 3.7% today, $3.24. That's having a little bit of a lift, huh? Oh yeah, I guess it's been climbing the last 7 days. I don't know anything about this coin. Does anybody know anything about this coin? This market cap, it's at a $46 million market cap. Is that right? 46 million? Weird. I don't know what this coin is. I have no idea. I've never done any research on it. It's ranked 582nd. Weird. All right, let's move on to the news stuff. We have a lot of stuff I want to watch. Let's get into this. All right, the worst of the volatility for tech is likely over, says Deepwater's Doug Clinton. Let's see what they got to say over here on CNBC television. Guys, that like button, appreciate you all. Patrick Murphy, what's up, dude?
Last Monday, investors woke up to a sharp sell-off in the equity markets, but by the end of the week, the major averages nearly came all the way back, including the Nasdaq, which was only down fractionally by Friday's closing bell. Joining us now to give us some perspective on the tech sector, Doug Clinton, Deepwater Asset Management.
Oh shit, hold on, I am so sorry. I had a different, god damn it, I apologize. I didn't mean to blow your eardrums. Anybody just listening, I was recording something on my laptop and I had I hate that it does that. It links on my laptop. That is so stupid. We're going to start this over, and I apologize for just blowing your freaking eardrums.
Last Monday, investors woke up to a sharp sell-off in the equity markets, but by the end of the week, the major averages nearly came all the way back, including the Nasdaq, which was only down fractionally by Friday's closing bell. Joining us now to give us some perspective on the tech sector, Doug Clinton, Deepwater Asset Management managing partner. Doug, good morning. I mean, among the many things going on in markets in recent weeks has been a little bit of a rotation out of some of the bigger crowded trades that has included some of the mega cap tech stocks. Where does that leave us right now in terms of, I guess, creating your hierarchy of opportunities?
Mike, it has been a volatile week. It's been a volatile month. And our bet right now is that the worst of the volatility for tech, at least for this particular correction, is likely over. And we've referenced this data before, but I think it's really important. From 94 to 2000, so going back to the last technologically driven sort of boom period we've seen in markets, there were 11 corrections in the NASDAQ over that period of 10% or more. And then Monday, when we had that yen carry trade sort of blow up, the NASDAQ hit down about 15%. And so when we look at that historical data, we actually think it's sort of a signal for psychologically just how do investors process corrections when we're in these technologically driven booms. And it feels like down 10, 15% from peaks is sort of this clearing rate where you get a little bit of the exuberance out of the market. And I think that's exactly what we've had happen right here.
Although when it comes to, let's say, semiconductors as a group, down 25% last week, I mean, from peak to trough, and then still down 20%, it just seems to be a little bit of a rethink of the AI investment cycle, when we're going to get payback on that. How is that playing through to the stocks that you focus on?
It is a little bit of a rethink. We've had more of this conversation about when will we start to see meaningful revenue from all of this CapEx that's going into AI, hundreds of billions of dollars likely over the next few years. And the reality is this for us. Number one, when we think of when we're going to start seeing payback, I still think there's this mismatch between the companies who are actually investing in this technology and the investors on the other side. I think investors are hoping to see payback, over the next year, 18 months. And if that's the case, they're going to be disappointed. I think we won't see meaningful AI revenues for a lot of these companies for a year plus. And I think the companies like the Mag 6, the mega cap tech companies who are driving this boom, they have longer horizons in terms of how they're thinking about payback on this technology. So that mismatch is always a risk. When we look at where we're trying to play it, Taiwan Semi has been a name that we've owned now for almost a year. It's a name that we've liked for a while because when we think of this chip revolution, everybody has to use TSM to build these advanced AI chips. And just last week, Taiwan Semi posted their July revenue numbers up 45% year over year. It was better than investors were expecting. And it was an acceleration from June at 33%. So the demand for these AI chips is still strong despite what the stocks have been doing.
Yes, it is. And it's not going to stop. Let's move on. The market is not done with the volatility, says High Towers. Stephanie Link. Let's see. Is she contradicting this last guy?
Inflation data in focus this week. We'll get the July producer price index tomorrow, followed by consumer prices on Wednesday and retail sales on Thursday. And on the earnings front, reports from Home Depot and Walmart will offer some color on spending, inflation, and the state of the economy over the next few days. Joining us now to talk about...
Dude, every time I go to Home Depot, I swear to God, I need to buy stock in their lollipops. Because they're like $1 each. And every time I have to go to Home Depot, my daughter has to come because she knows she's going to get a lollipop.
How all this fits into the market. Stephanie Link, Hightower Advisors, Chief Investment Strategist and Portfolio Manager. Yeah, good morning, Steph. Obviously, it probably makes sense to dial back a little bit, a couple of weeks, to figure out what the markets have been contending with and where we sit right now. Obviously, a little more of a pronounced slowdown flavor to the economic data, destabilized the markets in some degree. We got some kind of aggravating factors from the unwind of these popular hedge fund trades, yen carry trade, and now it's about, you know, okay, we're down 5-6% in the S&P 500. Has that repriced the market enough either for a slowdown or created more opportunities for you?
Well, I think we're not done with the volatility, Mike. We know that seasonally August and September are tough months for out of the year. The good news is that we're kind of still in the thick of earnings, and we're getting real-time information from companies. And at the end of the day, there is a lot of noise out there with regards to the economy, with regards to the Fed, with regards to elections, and a lot of other things happening, the yen carry trade unwind. But earnings matter the most. And at the end of the day, that's what I'm paying attention to. And so all of last week, I was actually buying last week because I heard from companies like Eaton, like Lam Research, like Amazon, like Bank of America. They all had really pretty good things to say, and earnings are actually getting revised higher. So I think you want to use some of the volatility to be adding to positions. And so kind of that's what I've been doing.
Yeah, I mean, there's no doubt that, as promised, the earnings growth has broadened out to some degree away from the very largest growth stocks, at least coming off of sort of flatline levels for a while, and that's played through in the second quarter reporting numbers. I guess the question is, you mentioned a few stocks there, you know, Eaton and Lam and Bank of America, which probably need the economy to hold together reasonably well in order for them to make their numbers going into next year. So I guess that's the question. Are we just sort of sitting here, you know, going economic data release by data release and figuring out if the economy is well?
Yeah, no, I know. We are going by release, and that's kind of a challenge on an everyday basis. But for the long term, I mean, I think we're running at about 2.5% in GDP. I know the Atlanta Fed tracker is at 2.9. That's probably too high. But I think the consumer has hung in there fairly well. I mean, I know the labor market is certainly softening, but it's still quite strong. Wages are still okay. Inflation is coming down. Interest rates are coming down. I mean, the 30-year mortgage rate has gone from 8% to 6.4%. And I think there's a lot of pent-up demand in housing, too. And that has a multiplier effect as well, as you know. So I think we're in okay shape for the time being. Always things to worry about, but I worry when I don't worry, right? Because that means that we're all complacent.
Sure. And certainly the market hasn't been complacent about consumer trends. If you just look at, you know, consumer cyclical stocks, they've suffered for a while. Is that an area that, you know, you're focusing on more? I mean, we obviously are going to get, as we said, Home Depot and Walmart this week.
Yeah, I mean, and I do own Home Depot. I'm a big housing bull, though. I do think as interest rates continue to come down, you do, as I mentioned, you have a lot of pent-up demand. We're 5 million homes short in this country. You've got 5 million millennials that are first home buyers, and that bodes very well for the industry. But we'll get real-time information from the consumer. You know, all's not...
BlackRock's fucking all that up, though, buying all the single-family homes, which they should not be allowed to do. It's kind of bullshit.
Perfect, Mike, as you know. There are some stress points with the consumer, but for the most part, I think watching the labor market is the most important thing. I don't own Chipotle, but that stock is down 20%, and it's certainly on my radar screen, especially since they have 40 million rewards members and a very sticky customer base. And so I'm looking for opportunities within consumer.
Every time I hear the word Chipotle, I will never forget the time I went to... It was like I think we had to go to like Bob's Furniture, and it was in the same place as Chipotle. And my wife, she looks at me and she goes, "Wow, there's a lot of people in Chipotle, huh?" And I was like, "Chipotle?" It's Chipotle, dude. I died. It was so funny. I'll never let her live that down. All right, let's see. The free pass for many AI stocks forward is gone. Let's see what they got to say over here on CNBC. Let's do it.
Take a closer look at the markets. JJ Kinahan is here. He's IG North America's CEO. JJ, how would you fix Starbucks?
Hey, Kelly. So it's interesting. I just saw a podcast with Howard Schultz, and he said kind of what Andrew said. What made them great was the experience, and he's trying to figure ways to bring that back, because that's what they've lost. And now, to the point I think you were making there, Andrew, they are just another transaction. And he used the word community. He said,
look at this. Mining King, Starbucks. There you go.
We built our business around community, and the community is what's lacking right now. And if you look, they're one of the companies that just came out and said they are afraid for the consumer. And if the consumer doesn't feel that sense of community, I think they do have some tough times coming up. And hey, maybe my retirement plan, Andrew, will be being a greeter at Starbucks.
I'll see you there, Jay. I always wanted to be at Walmart.
Well, they've also, by the way, they've priced everybody out of the market.
Yeah, and it's all like
and they could do. I mean, I would do drip coffee for 99 cents, literally, just to get people in the door. It's the highest margin product that they sell. Just black coffee, just to get people in and not make people.
Is the lowest margin product they sell, or the highest?
No, that's the highest.
Like coffee still is, not
black
like the bubble
coffee
drinks or whatever.
No, black coffee is the highest margin drink because there's nothing in it.
Just you give that up just to get people in the door.
You just give it up to get people in the door. You try to make people feel that there's a value, but you also do it without trying to cheapen the brand. That's the other thing that's happened. It feels that everything's been cheapened because all of the things. There's always a sale. You're always getting these notifications every 10 seconds on your app that they've got, half price this and that. That doesn't make you feel like you're at a high value operation.
Not at all. You know what, JJ?
No,
I find. Go ahead.
It's why I think all the, I'm sure you guys are experiencing it there too. Think of all the independent coffee companies that have popped up even since COVID, et cetera, and they are competing and taking market share away because they have been able. A lot of these smaller, 1 or 2 person shops have been able to get that sense of community. People hang out there, et cetera. You just don't see as many people sort of hanging out at Starbucks as you did at one time, and it's become very transactional.
Other than the high school groups in my town. Anyway, JJ, what I was going to point out about this is a week ago, at this very moment, I think the VIX was at 65. And here we are talking about how Starbucks should change itself. What an odd market is that?
Yeah, if you went to sleep a week ago Sunday night and you woke up last night, you would have been like, wow, last week must have been a really humdrum sort of week.
Right.
And what's really interesting to me on the last week, though, Kelly, is when we see markets like this, what often happens when the market collapses is you see retail traders, the first place they tend to go is things like SPX and SPDR. So, the indexes or index-related ETFs. What was different about last week's is what we saw a lot of our clients do is go and start buying stocks or selling puts on stocks, taking advantage of the high volatility in order to play for a snapback. So I found that behavior odd compared to other weeks. And so, one of the 2 places, it really is programmatic almost. The 2 places retail tends to start, Apple and Microsoft. We saw it again, great companies, great cash flows. The other companies, they went to, Goldman Sachs and Coca-Cola. Again, similar profiles. But so that was, to me, one of the most interesting things is there was a change in behavior where people viewed this as a buy the dip mentality, much more than a, run around screaming with the hair on fire mentality.
What do you do now then? I mean, because a lot of people have suggested, and I'm sympathetic to the idea that this whole story still has a few more innings left to it, but I don't know.
Well, usually these things don't just end so quickly and it's, all's back to normal. I do think one of the side effects you'll see, if you think about it, the VIX was trading at a, under 15 level for so long. As we speak right now, it's right around 20. I would expect the VIX to stay near this 20 level for a lot of the rest of the year as people are taking into consideration again, hey, the market actually can go down. We just hadn't seen it that quickly and seen volatility explode that quickly in quite a while. So I would expect the side effect to be that people are a little bit more respectful of the downside than they had been to this point. And let's face it, there really was no reason to be. The market just kept going straight up. But I also think people are reassessing their portfolios. Some of the names that got momentum, if you will, just because they were involved in AI, et cetera. I think one of the things you saw from this earnings season is how are you actually going to monetize AI? All right, you put all this money into it. What's going to happen to it? And I think sort of that free pass, if you will, is gone for many stocks going forward.
Interesting. All right, moving on. The risks for oil are skewed to the downside next year. Let's do it.
Rising geopolitical tensions in the Middle East and recession fears keeping the energy sector on edge. Joining us now is Dan Stryven, Goldman Sachs head of oil research. Dan, it's great to see you here. Kind of in this offsetting currents, I guess, in the energy markets. Oil's been in this range. What do you think is the key swing factor here?
Yeah, so we have been calling for Brent in the 75 to 90 range. We did test the lower bound, the floor, last week. From here, we think we move a bit higher. Positioning is very low. Net managed money by money managers is at the lowest level since 2000. We still think we're going to see some draws during the, sort of the last part of the summer season. But looking into next year, we think the risks are skewed to the downside.
And that's because of the economy, demand?
We do think that demand growth has slowed and is sort of normalizing to its long-term trend, just above 1 million barrels per day. The last big post-pandemic boost from the jet fuel recovery is now behind us. And I think the upside is capped by OPEC's plans to bring those barrels back from October onwards if the market allows it.
What do you make of the way the market either, I guess, has or hasn't or has occasionally reacted to these flare-ups of geopolitical conflict? I mean, sometimes it sort of shows you what the market kind of is primed to do anyway. But I mean, how are we digesting all these things?
I think the sensitivity of the oil price, the flat oil price, to geopolitical tensions, with still ongoing wars both in Ukraine and in the Middle East, has diminished over the last 2 quarters. I think the key reason is that we haven't seen significant disruptions to oil markets, to oil supply. And second, there is a lot of spare capacity, meaning that if you were to see, for instance, a drop in supply from Iran, that countries such as the UAE or Saudi Arabia would likely step in, fill in the shortfall, and keep markets pretty balanced as they have been over the last 2 years.
I guess, with U.S. production where it is in terms of being at a record at this point, is it just a smoothing effect? And what does the refilling of the SPR mean, if anything?
So currently the SPR is being refilled at a fairly slow pace, call it 3 million barrels per month. The level of the SPR inventories is now quite low, but you could argue that with the U.S. now being a net exporter of oil, that the sort of equilibrium SPR level that you need is smaller.
Yeah, I mean, I remember going back and looking at what the SPR was in the 80s and how many months or weeks of U.S. production it would take to refill it, and it was a lot. And now it's almost nothing, right? Right. We would be able to do it quickly if we had to. How much downside, though, do you think ultimately? You mentioned you think maybe we bounce here in terms of crude prices and then maybe go lower from there.
So base case for next year is still Brent in the low 80s, WTI in the high 70s. But I think the risks are skewed to the downside because of a lot of spare capacity. The possibility of a recession, definitely not our base case. But our economists see sort of a 25% probability. If that were to happen, and if OPEC were not to respond aggressively by cutting production further, you could see a potential drop in oil prices of up to $30 per barrel in a median-sized recession.
Nice. All right. Mining King says, I want to own real estate wealth equal. Wait, hold on. What are you saying? Craig, I want to own it. And he said, real estate equals wealth equals rent equals passive income, tax write-off, no earned income equals yacht. Oh, 5 years from now, I want to own 10 properties. I'm telling you right now, they're going to kill you early. All right. Former Pentagon officials, Elbridge Colby on Middle East tensions. Yeah, I heard some weird shit's going on over there. Let's see what they got to say.
Hezbollah firing dozens of rockets towards northern Israel. This took place on Sunday. No casualties reported, but the country remains on high alert for a potential retaliatory attack from Iran. This after last month's assassination of a top Hamas official, and we've been talking about.
Can everybody just get along, please? Like, what the? Like, it's so crazy.
That prospect joining us right now with the geopolitical headlines heading into the week. Rich Colby, former Deputy Assistant Secretary of Defense for Strategy and Force Development under President Trump. Good morning to you. We've been talking about some kind of retaliatory effort and just how much things escalate from here. What do you see?
Well, great to be with you, Andrew. It does look like the Israelis are thinking, according to Axios, that a strike is likely to happen in the coming days. And both Iran and Hezbollah have said, pretty direct things about some form of retaliation. So it does seem likely. And of course, the U.S. moves with the carrier and the guided missile submarine and other assets also suggest that something is likely to happen.
Okay, so play this out. Let's play the cards
out.
out.
The bombs?
Let's say there's a retaliatory attack. Then what?
Look, I think we have to assume that this is going to go on for the foreseeable future. Obviously, the administration is trying to push a ceasefire hard. I think the parties, or at least some of the parties, I don't think Hamas are going to get together on Thursday to try to come to a ceasefire. But it doesn't seem like there's a meeting of the minds there. There does seem to be a conventional wisdom that none of the parties, including Iran, really wants a regional war. But it's not clear that it's entirely within their power to do so. And Hezbollah seems to be pretty aggressive, as we've seen. It's not clear that they're going to do exactly what, say, Tehran tells them, even if Tehran does want restraint.
Man, the one who says, yeah, those are the missiles that got through the Iron Dome defense system. Damn. That's crazy.
How strong is Bibi Netanyahu's position inside of Israel right now, given all of the pressures, both from the U.S., but also, of course, from Iran on the other end?
It looks pretty strong compared to where he's been, Andrew. I mean, I think, again, the administration's clearly tried to push hard on him, and ideally they would have preferred another leader. But I mean, I think if we thought back in October, would Bibi still be here in August of the coming year, people would be surprised. And it does seem to reflect a pretty strong sense within Israel, and I think fairly so, that they can't allow a perception that they've been defeated in Gaza. You've seen the Israelis continue to be operating there and going after Hamas's military forces and so forth. So, again, I mean, it doesn't seem like there's a clear basis for, a true resolution of the conflict where we'd see something approaching stability.
And maybe that's why the oil price is up, even as everyone says, they do too much. They strike the oil facilities in Iran. It kind of, sucks people in more broadly. What about Ukraine's incursion into Russia, Elbridge? What can you tell us about that?
Well, look, I think everybody's been pretty astounded and impressed by the Ukrainian move. I do think there are questions about what exactly the Ukrainians are trying to achieve. They've advanced into Russian territory. But, the main sort of thrust of the conflict is in Ukraine's east, where the Russians continue to make progress. Perhaps Kiev is trying to sort of switch the narrative or pull Russian forces away, but it's not clear how that's going to work. And I mean, that's what the Journal was saying today, that even some Ukrainian forces in the east were saying, hey, what about reinforcements here? So we'll have to see how it plays out. The Ukrainians have certainly, I think, impressed and included, and I think the Kremlin's kind of been knocked on its back foot a bit. But I don't see this as fundamentally changing the trajectory of the war.
Can you sort of prognosticate how you think this election here in the United States could impact all of what we're talking about?
Well, look, I think it's a huge question, Andrew. And I mean, to me, it's got to be one of the key factors in the election for Americans is looking out at the world. It's an exceptionally dangerous time. Not only the places you mentioned, but the Korean Peninsula and, of course, the Chinese are still preparing for a conflict. And moreover, there's a deep structural tension at the economic level where you see basically the Chinese continuing to focus on an export-led, industrial production model, and the rest of the world worrying about another China shock. That's a deep, very serious source of tension. Look, I'm biased. I support President Trump, but I think the current trajectory that we're on is not a good one. I mean, there's a lot of the rhetoric that people hear, which is, the rules-based international order and so forth. But what you really see is a yawning gap between our capabilities and our pledges. I mean, the carrier I mentioned, for instance, I believe there's no carrier in the Pacific right now. And the AP is reporting that the U.S. is behind on pretty much all of our naval programs. So, we're talking big, but we're not really following up. I think what we need is a fundamental reindustrialization, particularly of our defense industrial base, so we can produce for ourselves and for our allies like Israel and ideally Ukraine, Japan, et cetera, Taiwan, et cetera, but also a strong military that we use sparingly. I think that's the kind of a model we need, and I think we need a fundamental change because we're headed to a pretty bad place right now.
That's terrible. All right, so I think we have a couple more news clips I want to watch. Let's see what this one's about over here.
Got some more market catalysts coming this week in the form of CPI and PPI inflation data. Joining us to talk about that, the Fed, the recent volatility on Wall Street, maybe a little politics.
Bump this up a little bit.
Lazard CEO Peter Orszag, it's nice to see you. Good to be with you. We had what was a wild week last week, but it almost is as if it disappeared. Like it happened, it didn't happen. Given where we were at the end of the week, what's your takeaway from what happened?
Oh, I think the U.S. markets overreacted to what was not it wasn't a good, but it was not a terrible jobs report. That's point one. Point two is there clearly was an unwind of the carry trade in Japan, and that's natural as the Japanese raise interest.
How cautious, though, are you right now about thinking about what we're walking into this fall? We heard from Brian Moynihan, who was on Face the Nation yesterday. He has always been, I don't want to say always, but he's been relatively bullish on the consumer for a long time, and he had this sort of hesitancy, I think, to some of his language.
Look, I think the good news is inflation continues to come down. That's a positive. The consumer has largely held up, although there are some signs of, especially for lower and moderate income families, some additional stress. But generally, pretty decent, as is the labor market. So I think it's pretty good. I think there is a risk factor coming from the Middle East now. But overall, I think the picture is actually pretty positive.
So when your clients who are making deals and thinking about what's going to happen this fall, are you saying go do it? Are you saying wait till the election's over? Are you saying wait till the Fed, cuts rates by 50 basis points? If you think it's 50 basis points or 25 basis points, what are you telling them?
I think most boards, most CEOs are saying we have to look past some of this noise like last week. Inflation continues to come down. The Fed will cut rates. I personally think it'll be 25 basis points.
25 in September.
We can talk about that.
Okay.
And with regard to the election, that the only thing that's going to happen is, if anything, the antitrust and regulatory environment will get better, not worse.
Under either.
So
you believe that if Harris wins, that there's going to be a move towards the center as opposed to towards the left, or even remaining where the Biden administration might sit relative to the way people think?
I'm not sure, but what I do know is that the government continues to lose in court, at least especially on vertical integration cases. And so that's what's going to dominate, even without a personnel shift.
Do you think that a personnel shift would be in the making?
I don't know. I mean, I think all of this sort of public talk about who's going to take which roles, et cetera, or who's going to get replaced is vastly premature. But again, on the substance, the laws haven't changed. The interpretation of the laws are what has evolved over the past few years. And the
right, but there is a chilling effect just by default if you have a certain, what do they say, personnel-less policy.
Do I think it would be better if we had a different approach? Yes.
You think that but what I'm asking, I think, is a different question, which is one of the things that we've heard in the last 2 weeks, at least privately, from people who are close to the Harris administration, or the Harris campaign is what I should call it, that you're going to see a pivot in terms of her talk about the economy and her talk about regulation towards the center. Then there were people who saw the Tim Walz nomination or appointment to be her VP and said, oh, maybe that's actually a leftward turn. And then you got a lot more calls from other people saying, well, actually, that's a head fake. Don't think about that.
He's the most bipartisan
that's this
person
other thing.
in Congress before he became.
Right. Here's what I would say. I think talking about the personnel that will take which slots, you should leave that up to whoever wins this election. But what I will say is, I think it's clear that the Harris-Walz campaign, and if they win administration, is much more open to business interaction. And that goes back. The vice president has been meeting with business leaders for years. I've been involved in some of that. And so there is an openness to an interaction. Now, whether that, I think she should have the right to determine exactly what the implications of that are, but at least there's an interaction and a discussion.
You mentioned a couple of times that inflation continues to come down, which in most respects it does. We do get the CPI this week. It's maybe going to go kind of sideways a little bit. Do you feel as if the impression that inflation has come down is pervaded enough in terms of what average consumers are experiencing? Because that's been slow to change.
Yeah,
Real quick, did they change the round table here, like to get rid of Joe and that other lady? Does anybody know? Because they always argue, this guy Andrew and Joe, the older guy.
But the biggest thing on inflation is the entire narrative and analysis has been wrong. Almost all of the inflation on the way up and inflation on the way down has been driven by the supply side and not the demand side, maybe 80% or so.
80%. But then how does NGDP grow 17%?
Because, I mean, again, what's happened is the pandemic came, pandemic went. That is the vast majority, even to this day, of what's happened in inflation. And so the entire narrative that it was, inflation was caused by excess COVID relief, et cetera, I think is increasingly turning out just to be wrong.
How do you get nominal GDP to grow 10% by supply shortages? How do you grow the nominal size of the economy 10 or 12 or whatever percent?
Because you have a combination of real growth and, yes, some inflation. But the question is, what caused that inflation? And it was not, if you try to parse out what's happening in the labor market, what's happening in supply chains, what's happening in margins, which, by the way, I think was not greedflation, but rather inventory management concerns that when supply chains happen or get disrupted, you need to be careful about what you're doing with your inventory to make sure that you're not alienating your consumers. If you put all that together, again, the vast bulk of what happened was inflation. Now, what's interesting about that is also on the way down, the vast bulk has been supply chain also, which means the implication is almost or very little of the disinflation is actually due to...
So the Fed's been riding along.
The Fed tightening, I think, has had very little to do with the disinflation we've seen.
What is the sort of confidence, to the extent that you're a gauge of confidence in the boardroom? I remember Faber actually was asking me just last week, I was in Paris. He said, what's the confidence like of all these CEOs? And I said, well, it's interesting. At the beginning of the week, they were very confident. By the end of the week, they weren't that confident at all. What are you seeing? And I think that was actually, frankly, a function of their own stock price.
A little bit, but look, I think that at least in terms of deal activity, where we're seeing continued momentum, a lot of this has to do not only with confidence, but the underlying drivers. You've got massive changes in technology, a revolution in biotech. You've got the energy transition. You've got supply chains moving. Those are all big forces for thinking about how you reconfigure your business. And then, yes, you need the confidence to move forward, but that's not the only thing.
Interesting. This everything's going to shit. All right, let's see. This is about the buyer. Like we're in a buyer's market for new housing construction. I don't know. This is going to be interesting.
Let's talk housing and the impact of those recently lowered mortgage rates. Late last week, they fell to the lowest level in over a year. Joining us now is Ivy Zellman, Zellman & Associates CEO. Ivy, it's great to see you again. I like to pick up with this a little bit on the home price piece of the equation that, influences everybody. What do you see any early signs of what direction that's going to play out?
Is anybody purchasing a house right now? Can you tell me what your rate is? If so, I'm interested to know. I don't know what the rates are.
Well, at this point, I'd say that home prices aren't likely to go higher. I think they're going to continue to decelerate. Although the drop in rates had a bit of a mixed result. It's a little early to say, but remember, mortgage rates were over 7 late April and the first half of May. So it is about 50 basis points down, which certainly helps. A good rule of thumb is that a 25 basis point decline in rates is about equivalent to a 3% decrease in price.
Oh, wow.
But today, I still think that it's a buyer's market and looking for opportunities for incentives from those that are buying new construction and mortgage rate buy down. So it's tough sledding out there.
You think it's a buyer's market, or do you think it's still a seller's market?
Well, buyer's market for new construction in that there are great deals. And, for example, I talked to a builder late Friday to say, hey, did you see any benefit from the drop in rates? And they said no, but we were able to buy 3.99% commitments for mortgage rate buy downs, which is definitely a good deal for a consumer. So in the new
real quick, Max said it's about 6.25 to 6.5%. Now, when they say like going from 7 and they drop 50 basis points, like what does that equate to, Max? Actually, could you put that in the chat?
Construction market at 3.99% mortgage rate is pretty attractive and probably gets you back to sort of normalized affordability. The new market is about 10% above trend line. The existing market's still about 20% above trend line, even if you account for the drop that we've seen in rates.
Wow, it's amazing how they flip-flop from how it used to be, 10, 15, 20 years ago. What about?
All right, so he said it's about 0.5%, 5.5 in Canada. Interesting.
The builder stocks, which were under pressure last week, and I'm curious, kind of what are their catalysts? What drives them at this point? People have now pointed to buybacks. They've pointed to, financial things that they can do that aren't just on activity anymore. But how are you thinking about them?
Well, the builders right now are definitely still on an absolute basis seeing pretty healthy absorption. I think because of the pressure on price, we're going to see a normalization of gross margins, which we think should be reflected in analyst outlooks. With that said, if we see further pressure than people are accounting for, the stocks might be under pressure in the near term. But I think that, again, they're better businesses than they were in prior cycles. I think people are optimistic that they can weather any significant downturn better. But I don't really see a catalyst in the near term unless rates were to drop another 50 plus basis points to get us back to trend line and for affordability. So I'd be a little bit leery that comes to fruition today. But if it does, in fact, come to fruition, I think that the stocks will start to react positively.
Yeah, and that's a tricky equation, I guess, Ivy, because if rates go down that far, who knows what we're talking about in terms of where unemployment has to get to, maybe for the market to price that in. So, and at the same time, we have seen existing inventories rise to a degree here. So are we moving the equilibrium point here between the kind of advantage of new construction versus existing?
Well, that is a good point. Nationally, the last data point showed that inventories were up almost 25%. A lot of the Florida markets are seeing the greatest increase. Tampa's up over 90%, but across the board, I'd say 70, 80% in most of the MSAs. Denver's up, San Diego's up. And because of that, it becomes a more competitive market for builders to, definitely have less advantage than they've had when they were the only game in town. I don't know that across the United States, though, we could say that, in the Northeast and the Midwest, inventories are just up modestly. So I still think there's an advantage where there is new construction in those markets, which is definitely less plentiful, but still an advantage for the new construction area in those parts of the country.
Interesting. All right, moving on. Actually, we're gonna go to hold on. Oh, that was just this page. All right, we're gonna move on to videos. This is what I got. All right, let's talk about Litecoin, some more crypto stuff now. Litecoin price prediction: will LTC coin reach $1,000 in 2025? Bruh. I don't know if it'll reach $1,000, but we're gonna see what he's got to say over here on Altcoin Daily. Let's do it.
What's coming up in the future of Litecoin? What are the things that you're excited about? What's the secret we can't know?
Will Litecoin, the 22nd most valuable cryptocurrency in existence, explode again into 2025. You see, in the bull market of 2017, from the trough to the peak, like right here, this time frame, Litecoin exploded over 313x. From 2018 to the bull market of 2021, Litecoin had a respectable 16x. Again, that's from trough to peak. And there is a reason I think Litecoin was suppressed last cycle. I'll get to that. But today, from the bear market of 2022 into hopefully the bull run of 2025, will Litecoin explode again? Is it worth investing in?
What's the secret we can't know?
My answer may surprise you. Watch today's whole video. And I am not a financial advisor, nor can I see the future. But for example, things are changing. Founder Charlie Lee did recently just announce that Litecoin is expanding into banking services, starting internationally.
After long due diligence with...
So it's not fantastic that we're getting into the banking thing, but to be honest, Litecoin, we need something to change it, so that's awesome.
The bank BBVA, we're happy to announce that they're going to start supporting Litecoin in their mobile app in Turkey, which is a very cool expansion into the international space, with people being able to use Litecoin, buy and sell Litecoin with BBVA. So that's very cool.
And that's amazing. That is absolutely amazing. Max says, yes, invest into LTC. Actually, I am. I put $1,500 into Litecoin on this last dip last week.
As a reminder, what is Litecoin? Well, created in 2011 by a former Google engineer, Charlie Lee, Litecoin was created for fun as a copy of Bitcoin.
You decided at one point to create Litecoin.
Mm-hmm.
Do you want to talk about the history of Litecoin as Litecoin Satoshi?
At launch, it was 4 times.
He took out all his profits too, if I'm not mistaken, right? I don't know if he has any left, but
it's faster, had 4 times the max supply, yet still a fixed supply, and many people called it the silver to Bitcoin's gold.
Well, I mean, I've talked about this a lot. Like, I created Litecoin kind of for fun as a side project and didn't really expect much from it. And it kind of blew up and became its own thing. And it's taken over kind of my life. So, yeah, it's kind of a wild ride.
And I think back in 2017, one of the reasons Litecoin had such a moment is because you always got to look at the narratives for that cycle.
Real quick, so some people are saying, DJ says buy Caspa, obviously, right? Vinny says Caspa will eat LTC's lunch. So I like both projects. LTC is already widely adopted and it's used for payments everywhere. Caspa does have, tier 1 exchanges coming, which is cool. Kraken supposedly is supposed to be coming soon. But I still think it's a good idea to not put all your eggs in one basket, if that makes sense.
Narratives for 2017 were number 1, ICOs.
I'm going to bump this up a bit.
Altcoins could finally be easily launched on Ethereum, huge trend, but also payments, cryptocurrencies, cryptos as a currency. That's not a trend today with stablecoins, but back then, stablecoins were new, weren't popular, weren't regulated, and people were speculating which cryptocurrency would be used for daily payments to buy that cup of coffee.
So any coin that's going after fast, cheap payments, pointless. You have to be a store value first?
So, yes, in a sense.
Litecoin benefited back then. Yet, just 4 years later, into the bull run of 2021, payments was not a narrative. NFTs, digital art, gaming, metaverse, that was the narrative. Those were the altcoins that really carried the cycle. And people saw Bitcoin and also Litecoin more as investments, as stores of value. They didn't want to spend it, they wanted to save it. And because Litecoin wasn't a harder money, it didn't have the same network effect as Bitcoin. Litecoin's price back then barely reached, just past all-time highs from the old cycle and then tanked. This is a new cycle. There are different narratives. I'd say artificial intelligence, still gaming, RWA, real-world asset, and DePIN, all huge narratives. But because of the institutional adoption we're seeing from BlackRock, Fidelity, through the Bitcoin spot ETFs, more regulatory safe or regulatory compliant cryptocurrencies, to me, definitely a narrative. For example, Michael Saylor says Litecoin is also likely a digital commodity like Bitcoin.
There's only one we know of right now, Bitcoin. Someone might file an application to get Litecoin designated as a digital commodity.
He thinks like the institutions, or TradFi thinks. And Charlie Lee explains why even still today, Litecoin is liked by people that also like Bitcoin.
There are hardcore maximalists that use Litecoin without telling anyone.
Yeah, I know.
Yes, I've never had an issue, Joker Miner, with my Caspa and Tangem. I could swap whatever, usually. Let's see. Vinny says diversification equals being poor, all in, chance of a billionaire. Yeah, but you also have a chance of being a complete loser. Because if that one project goes to zero, I'll see you like on the corner and I'll have to throw you $20 because now you're broke. You know what I mean? So like there's two sides to that story.
And I know why they're using it. But why do you think it is? Why do you think Litecoin has managed to avoid the wrath of some of the Bitcoiners?
Well, when there was no pre-mine, so it was fairly mined. It's very similar to Bitcoin. So the only like kind of negative thing about Litecoin is that it came second, right? There's no first mover advantage. The other thing is some people don't like that I'm still around, whereas with Bitcoin, like Satoshi disappeared. So kind of people talk about the immaculate birth of Bitcoin, which is one of the benefits. Litecoin doesn't have that. But it's
DJ says people already broke. They're going to go from broke to broke. No, they're going to go from broke to homeless. There's a difference.
it's hard for them to hate on Litecoin because it's so similar to Bitcoin.
So what is the role of Litecoin today then?
It's a complement to Bitcoin. A lot of people use it because it's fast and cheap, and people just like using it as a payment. It just works, and that's what's kind of the beauty of Litecoin.
So let's talk about Litecoin today, because I do honestly think, really, for the biggest gains, you want to go with the newer altcoins, or also, I would say, bigger trends, commodities, or institutionally liked coins. Not the biggest trend, AI, RWAs. Those are the big movers, in my opinion, for this cycle. But Litecoin's that safer play. So what could it do? And it should be noted that back in 2022, Litecoin did implement Mimblewimble, which was a privacy upgrade, meaning if you want to transact in private, Litecoin is a solid option. But how does this work? And if I use Litecoin, is it automatic?
I know you've been a big proponent of privacy. You've pushed forward to have introduced more privacy features on Litecoin ahead of Bitcoin. What is the state of privacy right now with Litecoin?
So we launched MWeb, which is privacy and fungibility upgrade to Litecoin. So it's a extension block. You use extension block so you can transfer money from the Litecoin main chain to MWeb and back. So when you're in MWeb, we use a protocol called Mimblewimble, which makes it so that you can't see how much you're sending. So I think that's really important. Like when I send you money, I don't want the whole world to know how much I sent you or how much is in my account. So I think that's kind of a really important feature for real world cash.
And so this is activated all across Litecoin. Please don't get angry at me for not knowing. I'm afraid I haven't used Litecoin recently, but this is activated across Litecoin.
Yep.
And how much is this being used? Is it a feature you get by default, or is it something you have to choose to use?
You have to choose to use it. So you can easily, right now with Litecoin Core, you can easily send money between MWeb and the main chain. And we're starting to add this feature to Lite Wallet and other mobile wallets to make it easier for people to use. But yeah, it's something that anyone can use.
And what to expect next for Litecoin. This is the final 45-second clip.
So ongoing. So what's coming up in the future of Litecoin? What are the things that you're excited about? What's the secret we can't know?
Well, we'll announce that later. But I think it's very exciting about Litecoin entering the DeFi space. I'm also super excited about MWeb being released on mobile wallets. And we already have like millions of dollars of coins pegged into the extension block. So people are using MWeb right now. It's just that because it's hard to use right now without using Litecoin Core, it's preventing lots of people to actually try it out. So having MWeb being supported across different mobile wallets is the ultimate goal, to make it easy for people to use it.
Now, all that being said, I think best case scenario, and I'm averaging here, best case scenario for Litecoin in 2025 is around 800. How I came to this would be about a 2x from its previous all-time high in 2021, which to me would be very reasonable considering that we are seeing institutional adoption, and I think the commodity-like or safer-like cryptocurrencies like Litecoin will get into those ETFs or indexes from the BlackRocks, from the Fidelities, because it's just safer. That would be around an 18.5x at the peak of the cycle into 2020.
All right. Right now, where Litecoin's at, it's friggin', I'm just gonna end the video there because whatever. Litecoin $61 right now, right? Even if we get back to close to its all-time high, you're still looking at a 4 or 5x, right? Easily. And that's just guesstimating, right? 800, like, I'm not going to say it's going to double its all-time high. I would never say that. But if it gets close back to its all-time high, I mean, that's what I would gauge it on if you guys are going to invest. But again, teach his own. All right, let's see over here. Michael Saylor, this collapse will be way bigger than you think. Let's see what they got to say over here. You guys can let me know what you think about Litecoin in the chat if you want as we watch this. Let's do it.
Empires are built on productive property, and they're defended by firepower, naval power, air power, nuclear power, and digital power. You want the most digital power, just like you want nuclear power, air power, and space power.
New information has just come to light.
Interesting.
This collapse is way bigger than you think, at least according to Michael Saylor. This man predicted everything.
And I tweeted, I said, when the FDIC finally approves banks to hold Bitcoin on their balance sheet, everybody will want to buy it, nobody will want to sell it, and you won't be able to afford it.
Context: 4 years ago, Michael Saylor became the first CEO to adopt Bitcoin as its company's primary treasury reserve asset. Since then, MicroStrategy has outperformed 499 of the 500 S&P stocks. This man's company now holds over 250,000 Bitcoin, worth $13 billion.
Jesus,
and that's not even
that's
mentioning
insane.
the Bitcoin that Michael Saylor personally holds.
You have a significant personal stack in addition to what you own through MicroStrategy and a MicroStrategy stock.
Yeah, I do have significant personal Bitcoin holdings. I think about 4 years ago, I tweeted that I have 17,732 Bitcoin.
Jesus.
I haven't sold any Bitcoin. I continue to acquire more Bitcoin, and I think it's a great capital investment asset for an individual, a family, an institution, a corporation, or a country. And I can't see a better place to put my money.
How much do you personally own today?
At least that much.
Today,
Yeah, why would you ever say how much you own? That's so weird. They asked her that, or asked him that rather. Let's see. I love LTC. I use it all the time to move stuff around, old and reliable. LOL. And on almost all platforms. Yeah, you know what? That's a great point. That's exactly what I do too. I swap anything into LTC and then LTC to Coinbase to sell it and get it to my bank if I need money.
Saylor has revealed insider knowledge. Exactly what he has been predicting is coming true. This recent collapse is way bigger than you think. First, Michael Saylor explains here why Bitcoin sold off like this.
Bitcoin is the only truly global capital market in the world. And so if you think about the volatility of it, the volatility is the price that you pay in order to create billions of dollars of credit and liquidity at your fingertips, all times, everywhere, for everybody. And so on Sunday night, all the other capital markets are closed. Bitcoin is the only capital market that's functioning. What you saw over the past week is that it's functioning really, really well. And that is the secret to the success of the asset class.
And then, of course, the biggest critique of Bitcoin right now, the bigger question in Bitcoin is, but is this really how a hedge acts? This is kind of a worthless hedge if it's going to go down during a crash like this. Michael Saylor, what say you?
You know, volatility is a sign of high energy. Rivers, waterfalls, fires, windstorms, they're volatile. They have massive amounts of energy. Niagara Falls is a scary place. If you're going to play in the pool, 5,000 people have died in Niagara Falls playing with it over the past 100 years. But it generates 5 gigawatts of power. That's 7 million horsepower. That's 33 million people working as hard as they can. So if you're going to harness the energy as an engineer, then you want the volatility.
That was an epic point. That's crazy.
And if you're a tourist and you're playing in the water, you know, taking selfies, then it's scary. No one that understands Bitcoin is afraid of the volatility.
And
dude, that guy is such a G. I love listening to him talk. That's awesome. I got to go find that whole clip.
Other crypto leaders come out and try to signal that a major change is happening. There is risk. You need to be paying attention this year. Dire consequences are on the line.
The most dishonesty you can bring in when you say as your talking points, this is an issue of non-compliance, when everybody actually knows there is no way to comply by design.
Facts.
It's a Kafkaesque regulation through enforcement policy. It has become an issue because at least 53 million Americans own cryptocurrency. By seeding all of that, that's basically like saying take Microsoft, Google, and Apple and Tesla and just go put them all in Germany or go put them all in Abu Dhabi or something like that. How many times can we do that as a country before we go bankrupt? How many revolutions can we miss out on before America collapses as a nation state? So that's
if you guys don't know, this is Charles Hoskinson. He is the founder of ADA and co-founder of Ethereum. and he actually walked away from Ethereum to do ADA.
Real life consequence. We as a country have higher unemployment. We as a country have less jobs. We as a country have less economic competitiveness. And ultimately, we collapse as a country if we keep doing this.
Now, it's interesting. Michael Saylor says that if Kamala Harris wins, he wishes he could convey this to her. I mean, to both her and Donald Trump, whoever's going to win the presidency. Michael Saylor sees what's coming, and he wishes U.S. presidential candidates would just understand this.
The future is digital, right? There's a race to own cyberspace. That being the case, empires are built on productive property, and they're defended by firepower, naval power, air power, nuclear power, and digital power. Bitcoin's digital power. You want Bitcoin, you want to own cyberspace, you want the most digital power, just like you want nuclear power, air power, and space power. It's a good investment. It's like buying Alaska or like the Louisiana Purchase, and it's also essential to national security.
So which candidate is better for crypto, though? Is there a candidate that is objectively better for crypto? I can see some of your comments. Yes, obviously, Donald Trump spoke at the Bitcoin conference.
Hello, Bitcoiners. With your help, we will save our nation, we will restore our republic, and we will make America and Bitcoin bigger, better, stronger, richer, freer, and greater than ever before.
So let's see what Michael Saylor says to this. Who is the best Bitcoin candidate, Michael Saylor? I was actually surprised he answered like this. Does he know something we don't?
Which candidate is better for crypto?
I think that, again, crypto is, I'm not going to comment on anything political at this point. I'm going to say it's just a good idea to support digital assets and digital capital for any nation state, any political party, any politician. It will be a factor in November in the elections, I have no doubt.
It does seem
That was perfectly said. And that was a good way to keep him out of like a shitty light.
like at this moment that that crypto is breaking hard along ideological lines. You know, I mean, Trump certainly, you see him speaking at the Bitcoin conference, talks about making Bitcoin great again. Is that good for crypto, or long term, do you think? Do you really need friends on both sides of the political aisle?
Obviously, he needs to keep an account or take into account that whatever he says is going to affect MicroStrategy's, right? So that's why he's not like getting political.
I think Bitcoin is digital capital, right? The world's going to be remade. There's a digital transformation in finance taking place. Everybody on Wall Street understands it. Everybody on Capitol Hill understands it. Everybody on Main Street understands it. It's like electricity or fire or the internet. I can't imagine that a nation state, a company, a government, or any particular family even is going to be successful without embracing technology.
Let's take a minute to highlight partner of the channel, DeFi Technologies.
No, shut up, you fucking goddamn it.
Radar. So he sees what's coming, and knowing what's coming, how do you stay cool, calm, and collected when volatility like this happens in crypto? How do you not sell when price dips 20, 30, 40, 50% like this? Here's how Michael Saylor does it.
First of all, Bitcoin's been appreciating at 55% a year for the past 4 years. Bonds are depreciating 5% a year. The S&P is appreciating at about 13% a year. It's amazing to me that people would rather have a 20% ARR with 20 vol than 55 ARR with 55 vol. But if you think about it, it's pretty obvious you want the 50% return, not the 20% return. So if you're going to embrace the future, embrace digital transformation, it's going to be more volatile, it's going to be higher performance, but that's the future. So I don't get upset because I know we're winning and Bitcoin's winning. It's pretty obvious to anyone that can chart the thing that there's a right answer and there's a wrong answer.
So did you buy this dip? If it dips deeply like this again, would you buy this dip?
Michael, safe to assume you bought the dip this week?
We're buying all the time. We're buying every quarter. We're buying the lows, the mids, the highs. I'll be buying the top forever because I'm expecting Bitcoin will continue to appreciate as digital capital. I think physical capital, real estate capital, financial capital, people are going to sell those things and they're going to move their money into digital capital, and it's going to be a trend for a long, long time to come.
So it's just amazing to hear and see.
You know what? Very, very good point from Michael Saylor. Very good points, actually. Is the Mining King still here? Let me know in the chat if you're still here. Because he actually said something that was very interesting. Think of Bitcoin as property, not as just a coin or money, right? Just a question. I know you were saying earlier you wanted to get into buying rental properties. Why not just go all in on buying multiple Bitcoin and having multiple Bitcoin? If you think of them, if you would think of it as digital property, do you know what I mean? Would that make more sense? Be less headaches? Who knows? Anyways, let's get into the recap segment of things. Bitcoin, 60,326 bucks. Hell yeah. This shit was at like 58 when I first started. Ethereum, 26.99. Everything's coming back. This is nice. Nice to see. XRP still letting us down at 57 cents. ADA's at 34. We got, let's see, Caspa 16. Nice. All right, everything's coming back a little bit. This is kind of nice. Kind of nice to see it turning green again. We got $61.50 because I'm taxed on the BTC when I see it. Well, when you yeah, I mean, obviously you're gonna pay tax on anything, right? You're gonna have to do that on houses and stuff too. But house taxes get stupid complicated with everything. You'll learn that once you get rental properties. But yeah, if Trump changes the not getting taxed on crypto thing, that would be very interesting. So I guess we'll have to see. But guys, listen, it's still time to buy flashbang for everybody that's just joining. The fear and greed index is at a 25. We still have a lot of fear in the market, extreme fear at that, right? This is a collective consensus of everything in the market, you know, the prices, the news, the just everything, articles they read, like everything comes down to this one little ticker here basically, right? And yeah, it's just, this is how everybody feels. So again, when people are fearful, it's time to be greedy. That's how it is. But anyways, guys, listen, I love you all. I appreciate you all. I got to get out of here. It's 11 o'clock. I actually streamed way longer than I expected to this morning. I got to get some stuff done before I got to go get the kids from camp. You guys have a great, happy, safe Monday. I'll catch you guys bright and early tomorrow morning, about 9:30 Eastern Standard Time. And until then, peace out and have a good day.
If she don't hawk to her, we don't talk to her. Perfect.
Eat shit.